With Dolla, repaying your loans have never been easier. Enjoy the hassle-free convenience of repaying your loans in two simple ways. One, Bill Express. With over 300 locations island-wide, you can find a location that suits your schedule to ensure a smooth repayment process. Two, online payments. Visit billexpress.com to enjoy the flexibility of repaying your loans online, anytime, anywhere, safely and securely. And the best part, it's absolutely free. Or you can even pay on the go and save time by taking advantage of our mobile payment option via link. For any queries or assistance, feel free to contact us at 927-4881. And of course, thank you for choosing Dolla Financial.
Welcome. I'm Renee McDonald, COO and Investor Relations Lead for L.E.A.R.N Grow Invest, where we make IR easy. Today, I'm your moderator for the Q1 2024 earnings call for Dolla Financial Services Limited, listed on the junior market of the Jamaica Stock Exchange with ticker Dolla. Leading this call today is the Dolla Group CEO, Kenroy Kerr, who is joined by the Group CFO, Trevine McKenzie, Collections Manager, Kurt McKenzie, and Ultra Financier CEO, David Henriquez. Please join me in welcoming the team and specifically welcoming CEO Kenroy Kerr to the platform. Welcome, Kenroy.
Hi, Renee. Good morning. Good morning to your viewers. It's good to be here.
Wonderful. It's always a pleasure to have you and your team. So let us just kick it off with a word of prayer, and then I will hand over to you to host your call.
Sure.
Okay. Lord, we thank you so much for today. We thank you for this opportunity to meet and to discuss the business of Dolla. Lord, we pray for your hand to be upon this company. We pray for your hand to be upon this call, and that your presence will be with us as we go through. Lord, may the technology hold up. May the words that are shared here and disseminated here be received in the way intended. So we just honor you this morning, Lord God, and we put this call in your hands in Jesus' name. Amen. So over to you, Kenroy.
All right. Thanks again, Renee. As I said earlier, it's really a pleasure to be here as usual. Thanks for facilitating us on your L.E.A.R.N Grow Invest platform. I believe that our shareholders look forward to these forums where they can be kept informed and they can ask questions about what's really driving our business. So good morning again to the viewers. Good morning to our shareholders and those other persons who decided to join us this morning. So I'm Kenroy Kerr, CEO for Dolla Financial, and as Renee says, we have said earlier, we have our Group CFO, our Head of Collections, Head of Credit and Collections, as well as the CEO for Ultra on our call today. So our Q1 results for 2024 showed significant growth and improvement in all of the key performance indicators that we track on a hourly, daily, weekly, monthly basis. And we are very proud that we're able to once again come on a call and be highlighting those improvements. Of course, this call is here to give information whether whether there are improvement or there are room for improvement. So I'm happy when we're facilitating a call and we are actually seeing great improvements in the results. So throughout the first quarter, our commitment to delivering exceptional loan services, fostering customer confidence, and just building and enriching the relationships, enriching the product offering that we have, that has remained really steadfast. And this is one of the things that distinguish us from a lot of other players in this microfinance space, just how we tailor solutions to meet the needs of our customers. And before I get into the overview and the highlights too, I just want to note that the impressive performance that we'd have had for Q1 2024 is also a result of the dedication and the commitment to, again, providing those innovative, that ease and flexibility to do business with Dolla Financial, and just paired with that level of consistent service that we try at all times to ensure it exceeds the customer's expectation. And it's also credit to a hardworking and committed team whose goals and ambitions are really aligned with that of the company. And that is what would have kept us really going strong for Q1 and what will continue to help us grow as we move into the other quarters of 2024. All right, so I'll just quickly highlight some of the results of the first quarter in 2024. The first thing is that you'd have seen where we made a dividend payment in Q1. This was in the amount of $100 million. And I mean, dividends for us is important. We will not necessarily, we assess the business, assess where we are, and determine if it's something that we can pay, whether it's a quarterly, biannually or semi-annually or on an annual basis. But we're happy that we were in a position to pay dividend and thus return some amount of value for our shareholders, a lot of who are our actual customers. We would have seen our total loan portfolio moving to $2.8 billion, and this represented a 26% increase year over year when compared to the first quarter of 2023. Profit before tax, again, very proud of our profit before tax for the first quarter. It amounted to $152 million. And again, this is another 24% increase relative to 2023 Q1. I just also want to point out that part being this profit before tax, it kind of gave an indication of how well the business have grown or how much growth the company has experienced over the last year and a half. Because in 2022, prior to being listed on the Jamaica Stock Exchange for the entire year, our profit before tax was about $167 million. So at 152 in one quarter, this is what we did for the entire year prior to being listed on the Jamaica Stock Exchange. Very important for us is the quality of the loan portfolio. This is our loan portfolio represents approximately 93% of our overall portfolio, and this for us is essential. It's very essential for us that we maintain a robust portfolio that is of the highest quality. And two of the things that we use to measure the quality of the portfolio would be the NPL and the ECL. ECL is the expected credit loss. Once you book a loan, you have to make a provision. And of course, we came out at 3.5% in the ECL, and our NPL at roughly 8.5% was still exceptionally good, considering the nature of the industry and how high risk it is. So that shows the robustness of the portfolio. And of course, our efficiency ratio at 41% is absolutely amazing. Those kind of ratio you don't usually see again in an industry like this. So those are really some of the highlights. As the other persons come and present, you'll see us breaking out. You'll see them breaking out some of those results. We continue to have at the forefront of our operation our responsibility to impact the lives of individuals and communities, and really play our part in building a really great country. So throughout Q1, we would have done a number of events that are related to corporate social responsibility. I'll just highlight a few of them. You'd have seen where we wrapped up our $1 Million Women campaign. This is a campaign that went for approximately 1 year. It started on International Women's Day in 2023, and it culminated in 3 women actually being awarded $1 million each for being a part of those campaigns. The campaign was one where 20 women came. The intention was to develop these women or women who run businesses, entrepreneurs, and to help them just be great business, great entrepreneur, build their business and grow their business. And we would have watched them participate in workshops, that they benefited from registering their business and just watching their business grow over that period. And of course, at the end of the day, 3 of the 20 women actually walked away with $1 million. But of course, all of them still walked away being better than how they entered the competition. You'd have also seen for International Women's Day and for the greater part of the first quarter, where we would have endorsed Dr. Taylor Mackenzie, who was a participant in the Miss Universe Jamaica competition. And that, again, it just shows our commitment to not just making profit, but how we can build and contribute to the development of individuals and just how we impact communities. In relation to some of the strategies that we would have employed during the first quarter, again, I'll just highlight a few. The list doesn't have everything that we did, but throughout Q1, we would have focused on a number of things like recrafting, redesigning some of our loan products. Of course, as we to stay relevant, we really have to look at what our customers are, look at what their needs are, and then we have to tailor what we do to ensure that we're actually fulfilling those needs and that the business can remain viable. So, for example, we would have made some adjustment to one of our very popular product, the One and Ready, came out with a 2.0, which offered much. It offered more features, more benefits to the customers, and we would have seen where just that repackaging, rebranding, and pushing that product a little more during the first quarter, we would have seen where the product itself saw growth of about 50% in just 3 months. So that was quite significant. We also entered in a partnership with Mirko Computer Technology, and this partnership actually benefits small business owners such as bar owners, persons who operate casinos, and it really goes towards businesses that are looking to go into the gaming industry. So we provide financing for roulette boxes and allow these businesses to just expand and grow. And then finally, we would have participated in the Jamaica Stock Exchange Regional Investment Conference. Of course, this event it has a lot of networking. You meet people, you build relationships, and that is very critical for the business that we do. All right, so at this time, I'll hand over to our Head of Credit and Collections, Kurt Mackenzie, who will just take us through the loan portfolio and talk a little bit about the quality and what comprises that portfolio.
All right, thank you, Kenroy. All right, greetings, everyone. I want to thank you all for taking the time to join us today. I want to say a special shout out to our directors, shareholders, my counterparts from the senior management team who are here with me on this platform, the entire Dolla staff complement, and most importantly, our clients. I would also like to thank the L.E.A.R.N Grow Invest team for having us once again for another exciting earnings call where we are pleased to present these impressive results and statistics. So let's jump right into it. Now, taking a look at the portfolio by sector, Dolla continues to tap into 6 major business industries along with several minor ones, with the majority of the business being related to essentially real estate and transportation. Primarily, construction is always happening, and commerce overall is essentially promoted by the movement of both product and people. We specialize in diversifying the portfolio to not only continue to capitalize on emerging opportunities, but also it improves the benefit of reduced vulnerability. And on the matter of vulnerability, let's take a look at the portfolio itself in terms of category. Now, with regards to statistics, they have shifted in a positive light in terms of exposure. As at the previous quarter end, the secured loans accounted for approximately 80% or just over 80% of the portfolio overall. Now, with an increased portfolio, the secured loans amount to 84% of the portfolio, and of course, the remaining 16% is unsecured, with the majority of that being personal loans. So let's take a look at how that is spread across the entire Dolla group. Synonymous to the prior quarter end, Dolla Guyana accounts for 5% of the entire portfolio. Now, unfortunately, we're winding down operations in Guyana due to geopolitical issues, amongst other factors that can have negative implications for the business. So the board has taken a proactive approach before things get to detrimental state, for want of a better word. But on a brighter side, the Ultra team has continued to spread its awareness and increased its contribution to the portfolio from just over 30% to 43%, whilst Dolla Jamaica continues to hold the majority of the portfolio. And now we'll take a look at the performance of the portfolio as at the end of Q1 2024. Again, as mentioned earlier, the majority of the portfolio is secured at 84%, and of the unsecured 16%, only a mere 3.5% has attracted an expected credit loss. Round of applause there. Thank you. Additionally, the ECL is a part of the overall NPL, as the majority of the expected credit loss are unsecured loans. So with the overall NPL being a single-digit percentage at 8.5%, practically speaking, only a mere 5% of the secured portfolio is non-performing. And by non-performing, it doesn't mean that we're unable to collect. It simply means that the arrears is just past 90 days for a number of reasons. We could be foreclosing a property, we could be waiting to dispose of motor vehicles, etc., a number of factors. In relation to our collection strategy and delinquency control, again, Kenroy, and I won't be discussing any of our secret sauce, but a few things are simple and paramount. We encourage our clients to engage us early on if there are any problems at all. The collection aspect is a very dynamic one, and it can be influenced by several factors. So we are consistently proactive with established protocols. In addition to all of that, with a competent, prudent, and shrewd adjudication team, vulnerabilities are basically mitigated or minimized from a very early stage. And with that, I now want to introduce David, the Ultra Boss himself.
Thanks, Kurt. Appreciate it. And I want to thank the L.E.A.R.N Grow Invest team again for having us for another earnings call. So last time we were here, I made some promises that we would achieve certain things. So I'm happy to announce that we have gotten our loan book to just over $1 billion. We're sitting at 1.15 billion, spanning 43 active clients currently. And we have made our promise to keep our NPL, get it back to zero from the end of our last call. So we've been able to maintain that 0%, and obviously we want to keep that going strong. Our total collateral held is just shy of about 2.8 billion, and with our usual the usual culprits in collateral: blue chip stock, real estate, both urban and rural, various motor vehicles, private and commercial. So as we move on, the aim for the year or for the next quarter is to continue to push as we have been. I'd love for at the end of Q2 that we'll be reporting a loan book of about 1.6 billion, if not better. So we'll continue to push that while maintaining our NPL at zero. And we look to always be improving our processes to make it better for our customers and, of course, better for the company itself. And to also strengthen and diversify the loan book, just so that our collateral is not concentrated in one particular area, that we're not necessarily lending to doing the same types of loans. So we are looking to expand, diversify our loan book, just to ensure that we keep strengthening from time to time. And that being said, I will introduce Ms. Trevine McKenzie, our CFO, who you all wish to hear from.
Thank you so much, David, and good morning again, everyone. As usual, it's a pleasure to be here to discuss the financials, amongst other things, just to ensure that we are inspiring investor confidence and that we are being as transparent as possible. Now, if we look at our financial highlights, our CEO went through quite a bit of them, but our income soared to about $365 million. Interest income was a little bit less than that at 304, which is net of interest expense. Operating expenses stood at 152 million. Likewise, profit before tax stood at 152. So we're having a little bit of a correspondence there. Our loan portfolio soared to $2.8 billion. Assets stood at 3.2 billion. Cash stood also at 135 million, and our total debt increased slightly to 1.9 billion. Now we're seeing a little bit of correspondence here between our numbers, or among our numbers, where we're seeing a 24% increase among these metrics, and we'll discuss later on how these looked compared to March 2023. Moving on to the balance sheet. So as I mentioned before, our cash and cash equivalents stood at 135 million as at March 2024, which is a 159% increase year over year. I believe we did mention in the previous meetings that we want to be landing at a stronger cash position going forward, and we are fulfilling this promise to you and to ourselves. So 134 is where we were, and we're quite happy about that, to be in a stronger cash position. Looking at loans, net of provisions for ECL, we stood at $2.8 billion, which is just about a 24% increase year over year. This increase is purely attributable to the sales and the demand that we continue to see coming out of the IPO in 2022. We continue to try to lend as prudently as possible, ensuring that collaterals are in place for the most part, as our portfolio secured 84%. And we'll continue to see this number increase as we go along. Now, loans payable stood at $1.9 billion, increasing by just 25%. You would have noticed in the annual report and in our audited financials where you're seeing quite a few loans that came in. We had a couple 100,000 from Mayberry that really led us here to loans payable, and you're seeing where all those funds were really deployed into the loan book. Other notable things on the balance sheet would have been other payables and accruals, which increased by 44% up to $173 million. And this large increase is really due to the dividends that were declared in the first quarter of the year. Now, this was paid out in April, so going forward, we won't be seeing this large variance, but 173 is where we were as at March. And lastly, on our equity, we're seeing shareholders' equity now at $1 billion, increasing by 30% year over year. And we are really proud to be able to make that $1 billion mark in terms of shareholders' equity. And retained earnings also stood at $549 million, up 66% year over year. And this is solely due to the increase in comprehensive income, just net of the dividends that were declared throughout the period. Now, moving on to the comprehensive income, we are seeing where we landed at $365 million in terms of interest income as at March 2024, which again is a 24% increase year over year. Our core business is loans, or is lending. So this increase is solely attributable to the sales and to the demand that we're seeing over the period. Now, likewise, net interest income increased by 22% up to $304 million. Net interest income and other revenues equaling $299 or $300 million, which increased by 23% again year over year, which led us to a profit before tax of $152 million, also increasing by 24% year over year. And we're also seeing where earnings per share did increase by 200% year over year to 6 cents. We are quite happy about this increase, or this growth in the EPS, which is representative of the income that we're seeing year over year. Now, moving on to our cash flow, you're seeing where we are still utilizing cash in terms of operating activities, investing activities, and financing. However, we did land at a stronger cash position than we did last year at $135 million. In terms of cash, though, and you may be seeing this in the numbers, we don't have the large double digits like we did in March of 2023. And this is because we are working on some fundraisers. Those are in the pipeline. They have not yet come through. But we have been utilizing the cash as best as we can. And as you can see, we have been efficient with doing that, keeping expenses down and ensuring that we're pumping as much back into the business, into the loan portfolio as possible. So you're seeing where there is a decrease here in terms of operating activities or net cash used. And this is because the lending is not as much as we did in the last quarters, but we will still be increasing this going forward once the funds are made available. And then we touch on our financial ratios. Kenroy did mention some of these before. So our efficiency ratio did improve to 41%, down by 4%. And this is also representative of the efficient use of the cash that we have on hand and of our expenses relative to our income. We're always proud to be a very lean company, ensuring that we are prudent with how we spend, and all those metrics that we see here. ECL also was down to 3%, down from 5%. We're really proud of that, and that is representative of the secured loan portfolio that we have and that we continue to maintain. Non-performing loans also reduced from 10% to 9%, which is also representative of the quality of the loan portfolio. And all our other metrics essentially were in line or remained flat year over year. Now, at this time, I'd like to hand over to Kenroy Kerr, our visionary CEO, to take us through the company outlook and where we will be landing in the next few quarters. You're on mute for us, Kenroy.
All right, thank you very much, Trevine. And just to highlight that the business, we are acutely aware that we have to be agile, we have to be flexible, and we have to adjust based on so many factors. And that is something that we look at on a daily basis and ensure that at the end of the day, the best, a strategic decision is taken that is really aligned to the changing needs of our customers or just the environment, how we lend, how we diversify the portfolio, and all of those indicators. So we would have announced at the end of March, I think about March 31st, the end of the quarter, that we are winding down operations in Ghana. I think that's very public. So I just wanted to comment on that and to say that the wind down of Dolla Ghana Inc., it really signifies a strategic decision for the group. And this is really aimed at mitigating any potential operational risk associated with the geopolitical tension or crisis that is happening in Ghana. And by gradually ceasing operation, we are also able to reallocate some of these resources to Jamaica, which we're seeing, of course, a demand for service, a stronger demand for service. And this, of course, will enhance the operational efficiency of the group in general. And just to state that Dolla Ghana, since inception, has been a profitable entity, including the year ended 2023. All right, to touch on just some other things that we're looking forward to in the coming quarters. For example, the first one is local expansion. We'd have made mention on the previous earnings call that we're looking at expanding into St. Thomas. And that is something I can confirm that we have done some work. We have done our market research based on the demand that we see coming from St. Thomas, based on the expansion, the highway, the build out of a new town center, that we have now identified a suitable location. As a microcredit entity, a regulated microcredit entity, we also have to seek a no objection or approval from the Bank of Jamaica or regulators to proceed with the opening of a new branch. And I'm also happy to advise that we have, in fact, received their no objection, and as such, we are now proceeding to open that new branch in this second quarter. So you can look forward to that. We are, again, just fulfilling the needs where we are seeing a great level of demand for our services. In terms of strategy, we're also looking to we started in Q1, and we're also just looking at our suite of products, looking to expand some of these products in areas where they're not currently being offered, and particular the one on ready loan, which I made mention in the opening, that we have redesigned. We're also doing some further tweaks to that product that we are pushing out in this quarter, and expect that we can see an increased take up of this loan product, which has really been a very profitable product for the group. And of course, we continue as we grow, we continue to scale, we continue to push for efficiency. And we started in Q1. We will continue to look at just some of our internal processes or systems, and we are working on getting those to a level where it can manage the growth, automating a lot of our processes. A lot of our processes that we do internally, we have commenced automation, and for the most part, we are on track with getting all of those initiatives that we have put in place for 2024, with the expectation of the growth that we're seeing, the growth that is to come, and what we have been seeing so far for the business. So I'd just like to pause here. I know that we'll be taking some questions, and then we'll be able to address all of those as we go along.
Thank you so much for that, Kenroy and team. So yes, we will be going into questions, but of course, I do want to say congratulations again to the Dolla team for, as usual, a great performance, and for keeping your stakeholders in mind with all that you're doing. So I'm sure that our audience is happy to hear about the dividends, because that's always one of the questions on the call. So congratulations on that as well. We have a number of questions to get through, so we will get started right away. And welcome back to the rest of the team as well. So the first question is, what is your debt threshold in terms of how much you're willing to take on?
Well, our debt threshold at this time, I believe, is about $2.5 billion. And this is based on the analysis that we have done to ensure that we're able to stay within our approved ratios that we have agreed with the board, etc. So 2.5 billion is where we are.
All right, great. Richard is asking, is it time to spin off Ultra now that Ultra is contributing so much? Well, he says 37, but I know in your presentation, Kurt, you would have mentioned that it's at 43% of the group's revenue. Is it time to spin off? And I know Phil was also in the chat saying that he's just waiting for the spin-off to happen. So I think I'll ask Kenroy to answer that one.
That is a good question. I appreciate the question, and it is one that we have been doing some analysis to ensure that we are, at the end of the day, making the decision that is most in line with returning the best revenues for our shareholders. So that is something that we're working on internally, and as soon as I'm able to give some more information, then I'll definitely share that with the public. But it's definitely something on our agenda.
Good to hear. What are the targets for profit for 2024?
For us, we would like to double profits. That's our target for this year.
And we know Dolla means business. So when you say that you want to hit it, you're going to do what you need to do to hit it, right? And David, with his Ultra presentation, would have proven that as well. So on to the next question. What type of assets are used to secure your loans? So Ultra, David, you would have shared that in your presentation. I'll ask you to reiterate. And from the Dolla side, Kurt or Kenroy, feel free to respond to that as well, please.
So on the Ultra side, we have stocks. Obviously blue chip stock is definitely where we want to be and what we want to have. So we have blue chip stock. We have property, both rural and urban, and a lot of it. That is the bulk of the collateral held. Motor cars, equipment. We do advertise the luxury items, but we have not gotten any of that yet. So we really have been focused on more the equipment, motor cars, and property side of things.
All right, in answering the question from a dollar perspective as opposed to ultra, primarily to keep it simple, we accept motor vehicles and real estate, but in some instances, you know, they never say never. We might consider some commercial equipment that we can have a lot of equity in, pretty much.
Okay, thank you for that, team. Richard is asking, have you exhausted the DBJ loan, and what are your plans to raise funds for this year?
Thanks for that, Richard. We have definitely exhausted the DBJ loan. We have so much demand that once the funds come in, we have a pipeline of loans, and we pick the best ones, and we're able to unlend quickly. In terms of our plans to raise funds this year, we do have intentions to do that, and we're currently working through that to have it done as soon as possible so we can get some funds to be able to unlend and increase income and profit like we're speaking about here.
All right, thank you, Trevine. Next question. What is the ceiling for Ultra? Where do you see it in 3 to 5 years in terms of loan book? David, that's all you.
I don't think right now that we have a ceiling. And where do I see the loan book? I would love to say 5 to 6 billion in the next 5 years. I mean, if we could be lending, you know, 1 to 1.5 billion each year as we go on, I think we'd be in a really good place. Once we can have funds available to lend and continue to grow the business, I think the sky's the limit, and then we can see how we can expand and just continue to grow as organically as possible.
Wonderful. Can Ultra lend to clients outside Jamaica?
That's I don't want to say it's a tricky question. The answer is, if somebody is residing outside of Jamaica, it is not that we cannot lend to them, but we would definitely aim to hold collateral in Jamaica, lend in Jamaican dollars, and transfer to a Jamaican bank account. So if it is that they would like to run their process through Ultra locally and then take their funds, you know, abroad to complete what they need to complete, then that's kind of on them. But we keep our processes in Jamaica.
Understood. Thank you for that. What is the average loan size for Ultra?
The average loan size now, I would say, is about 20 to 25 million. Obviously, we have a number of loans that are a bit below that, and we do have some large loans on our books. But on a consistent basis, I would say we're averaging around the 20 to 25 million dollar mark.
Okay, thank you. Will you be doing a rights issue to raise an additional 250 million and give current shareholders an opportunity to increase their shareholding at a discount to market? So they're being very specific with it.
It's a good one. I wonder if some of your viewers are actually listening in on some of the things that we're discussing at our meetings. So that's a good question. I can't give a definitive answer because, as we said, we're raising funds in line with the need of the business. So right now we're working on, Trevin would have mentioned earlier that we're working on a bond, and hopefully we can get that out, and then we will just do an assessment and see where that actually benefits the business. So if it benefits the business and we need that funding, then we'll look at that. But for this immediate, right now, I don't think it's something that we're going to be doing this moment.
Okay, understood. I believe there was a related question about the additional raise, seeing that the maximum for the junior stock exchange has increased to 750. There was a question asking if you intend to utilize that difference. So I believe the answer would remain the same. It suffice for both. Next question. What is the headcount at Dolla now? Team, staff size?
We're currently at 68 in terms of a total for the group.
Okay. Growing team. What went into the increase of operating expenses?
No, I think year on year, we tend to see the same line items being increased. The first one would be staff costs. Now, what we did as at the end of last year, and we care about our people, we want to ensure that everyone is working in an environment that they feel appreciated. What we would have done is a benchmarking exercise to ensure that our salaries and compensation is in line with market. And I encourage all companies to do this because things are changing, the market space is changing, and we constantly have to change, right? So we did this exercise, and this would have led to a slight increase in staff costs that we'll continue to see as we go along through this year. We also saw increases in legal and professional fees. One of those things would also be collections. Our collections efforts have heightened as we need to because the loan portfolio size is growing. So we'll see corresponding growth in those areas as well. And also we saw slight increases in the costs associated with raising funds, the costs associated with maintaining those parameters on the stock exchange, etc. Increases from dividend payments as well. So all those factors kind of led to the increase, which we believe is marginal compared to the increase in the overall growth of the company.
All right, thank you. Comprehensive. JP is asking, what is the timeline for taking on new debt of an additional $1 billion as previously stated?
Our timeline is as soon as possible. We're working assiduously to have that done quickly so we can start to see the benefits of that in the coming quarters.
Thank you. So the question is, what will the new location cost in terms of expenses, I guess, to build out and staff, etc.?
I believe initially, and we spoke about this in some previous earnings calls, a brick and mortar location for us is not very expensive. On a monthly basis, we don't expect it to exceed $500,000, and this includes salaries, rent, and all those other things that have to do with a location. And we find that once we start to lend from that location, we can quickly turn a profit. So really, it's just about finding a location that is cost effective, mainly the rent or the lease, and then everything else is really low cost.
Okay, thank you. TY is asking, which new location will be opened this year?
Yeah, I think we addressed that already. So we'll be in Morant Bay, St. Thomas.
Thank you. The next question is from Roberto, and he's asking if you intend to expand into other Caribbean economies like Trinidad and Tobago, and do you intend to build out a digital lending platform?
All right, so I'll take that one, Renee. Thanks, Roberto. So the expansion plans, as you can see, we are doing a streamlined strategic exit from one of our current markets. It's not to say that we are not looking at where opportunities exist, and as opportunities arise, we will explore and see how much it's in line with the strategies of the business. But for the immediate future, for maybe the rest of 2024, we'll really be focusing on expanding locally, where again the demand has been really tremendous. I think right now we have a demand where the level of demand that we have now and the level of funding that we also have, we're able now to really scrutinize loans and really pick the best to ensure that we just to ensure that the quality of the loan portfolio remains. So we will continue to have our eyes on regional markets and look for where those opportunities exist. But right at this point in time, there is really a great opportunity to build out and continue to expand in Jamaica, and that's our focus for the next several quarters.
Thank you. The second part of the question was asking about an intent to build out a digital lending platform.
Okay, so that area, I spoke earlier about improvements in our system to just scale and to deal with the expansion that we have been seeing and expect to see in the coming quarters. So we have started to build out internally first, because some of the expansion that you need for efficiency, like a customer-facing platform to deal with applications, you still have to have a robust system internally to deal with those. And what we're working now is on the internal aspect of things, automating all of that. So when we are ready now to implement like a app for customer or an application for customer to do their applications, it is pretty seamless. So we have a phased approach, and for maybe the next 2 quarters, we'll just be working on improving efficiency internally, and then we look at those other aspects of automation.
Sounds like a good strategy to me. I appreciate good internal processes that you can then build out on.
Correct.
So a related question was about your willingness to invest in an app to make loan processing easier. And again, I think your previous answer would have covered that. So Philip is asking, do Dolla staff have company-linked insurance coverage? And if so, which provider?
Philip, we do have insurance coverage for our staff, but I don't really would want to disclose the provider on this forum, but we do have insurance linked for our staff.
Okay, and he's also asking, have you placed a bid for pre-IPO investment in the Jamaica Mortgage Bank?
No, we have not, Philip. We haven't.
Okay, and I think with that, we have exhausted the questions that have been submitted thus far. So I just want to say thank you again to the team. Thank you, Kurt, David, Trevine, Kenroy. Thank you for making the time and continuing to be committed to sharing with your shareholders from this platform. So at this time, I will hand over to Kenroy for his closing remarks for the call.
All right. Thanks again, Renee, and thanks to the team at Dolla Financial, not just those who are on the call today, but all of the senior managers, all of the staff, those who interact with our customers on a daily basis, those who are out there, because our staff don't not to give away too much of our secret sauce, but we're a company that really go out and look the business that we want and not just sit in office and wait on anything to come through the door. So we actually go strategize, go out and seek business, and I really want to just big up the entire staff complement. Without them, none of this would be possible. So kudos to the team again. And just to summarize that the results that we presented here today, it's really an outcome of Dolla's steadfast commitment to achieving financial success, to expand our footprint, to just build as a #1 microfinance institution in Jamaica, and an institution that really deliver significant value to our customers, our shareholders, our investors. And just to in closing, just to say that we remain prudent, or we will remain prudent in leveraging our business model, strengthening the loan portfolio, and of course, upholding that world-class risk management practices that we employ on a daily basis. So thanks again for having us, Renee, and your Learn, Grow, Invest team. Thanks again for facilitating this call. Thanks again to the viewers who joined us this morning to keep abreast as to what's happening in this public company. And we look forward to more of these calls to share even better results as the quarters go along. Thanks.